Funding for the Stoller Report is made possible by a grant from the First American Title Insurance Company of New York. The First American Corporation is the nation's leading diversified provider of business information products and services that impact the major events of people's lives.
Hello, my name is Michael Stoller, the host of the Stoller Report, Real Estate Trends in the Tri-State Region. The topic of today's program is the state of real estate for 2005, Real Estate Experts' Perspective. I'm very fortunate today to have 6 leading experts in the real estate market. Jim Fitzgerald, head of the real estate for North America for HSA Nordbank. Scott Latham, executive director, Capital Markets Group at Cushman & Wakefield. Michael Belfonte, President and CEO of Belfonte Associates. Norman Sterner, Principal and co-founder of Murray Hill Properties. Thomas Lydon, President of the City Investment Fund. And last but not least, Howard Lorber, Chairman of Prudential Douglas Elliman Real Estate. The big question that comes up, a couple of months ago, Norman was at a seminar, and Norman was asked the question, is the real estate market too high in New York? And it relates to residential, relates to commercial, even though Norman's predominantly involved with commercial. And Norman, the question was, does it go up? Do you remember your answer, Norman?
The question was, or the topic was, what goes up comes down. And my response was, the only thing I'm sure of that goes up comes down is airplanes. And the reason for that, having done this for so long, is my medical bills haven't gone down. University education hasn't gone down. Cost of houses hasn't gone down. Why should real estate? Just because it's a heated market today. And
please, as you remember, as we said prior to the show, people are supposed to interrupt. This is not the McLaughlin Report. We're here to try to have other opinions.
You're not going to holler at me.
I'm not going to holler at you. But aren't we at really the highest level today?
For today. But had you gone back a year, you'd have said we're at the highest level a year ago. You've got plentiful money. You've got...
You mean we have people like him, lenders, giving away too much money?
No, I didn't say too much. I said plentiful. That means that there are cheap rates for reasonably long term. You've got a very cheap dollar as compared to the euro. It's $1.35 to the dollar. They're coming in here and buying 75 and 70-cent assets for their $1.30. You've got a market that is going to pay you 2% if you can find the right investment. You've got a stock market that's...
I can get money in a money market rate today at about 247.
Then what's wrong with owning a building that pays you 6%?
Yeah, but what about utilities going up? The oil goes up and down.
What do you think is going to happen to your money market rate when that happens?
I don't know. I have to look at the economists over here, the bankers.
Raise your rent.
Can you raise your rent?
Well, you can write a lease that has direct operating expenses, so that's passed along to the tenants.
But that's an office.
I think on the residential side, you don't have to worry about it.
Why?
If you own it and you're living there, and you're happy living there, it doesn't really matter exactly the price of what your apartment is at that particular morning. It's become, cocktail conversation of how much your apartment's worth. But at the end of the day, if there's a little dip or if it just doesn't appreciate as quick as it has been in the last 7-8 years, what difference does it make?
But the appreciation has gone crazy. I mean, if you looked at an apartment, Tom, your company is making an investment in this property on 83rd Street and First Avenue.
That's correct.
This was a rental.
It's a rental property that is going to be converted to condominium. A good location on the Upper East Side, and the apartments are perfectly situated for people who want to buy condominium apartments, mostly selling for under $1 million. And in Manhattan,
there's not a lot for under $1 million. And what's happening in Manhattan is people, not only aren't they leaving, the young people that have children, not only aren't they leaving, people are coming back to the city. They want to be in the city.
So they're following Steve Roth's comment that people in the 70s were mall people. People left the city and became mall people, and they went to the suburbs. And today people want to come back to New York because it has the best of everything.
Listen, and it's an island.
And it's an island.
I came back to the city from Long Island. I never thought I'd want to live in the city. It's the greatest. I'm sorry I didn't do it for the last 25 to 30 years. So I think there's a lot of people that look at it that way. My children who live in the city, they're not quick to move out of the city when they have children. You know, they want to stay in as long as possible, maybe stay in forever.
But can you afford? I mean, you know, today
that wasn't your question. Yeah. And Norman actually has an interesting perspective. Maybe
I'm happy that the lender...
Maybe unusual for a banker to think this way, but Norman basically just said you can't buy a new Mercedes for $15,000 anymore.
You can buy a new Mercedes for $30,000.
You can't buy it for $15,000.
But that's the price
so
I paid for my house.
On a relative basis, you know, maybe prices don't decrease significantly. We've got record lows as far as interest rates are concerned. And when rates go up, the argument is inflation will carry those rental rates with it. Just like bread doesn't cost 22 cents anymore. It's never going to go back there.
Do you drive a car, Mike?
Sure.
What do you drive?
A small Mercedes.
A small Mercedes.
The baby son.
$15,000 Mercedes.
He paid 15 grand for it 30 years ago.
The interesting part is I have a 34-year-old Mercedes. It was.
But that's a vintage now.
No, but excuse me, but it was sold
It's a nice
for $7,000.
German car, by the way.
It's a wonderful car. It was
No,
$7,000.
he said it's a nice German car.
It is. It's a wonderful car.
As a German lender.
It was $7,000 when it was new. I had to replace the windshield wiper. It was $150. Why should real estate be any different than every other commodity you own? And if you put it in New York, even more so.
Maybe.
People continue to forget it's an island.
Yes,
What
Howard?
more so, limited supply. Where are you going to go?
It's an island.
Limited
You're
supply.
here. God's not making any more
I
in
think
New
there's
York.
also a lot more people now. I mean, you have immigration, you have further demand.
Wait a second. Those immigration, can they buy $1 million apartment?
Maybe not in town, Mike, but certainly it brings the demand up.
That's why
in
the
town.
boroughs are strong also.
Well, excuse
What
me.
about Queens? What about Brooklyn?
Let's not say immigration in the same context as poor. There's a lot of immigration here of rich people.
And
Take a look at
it's
Trump
not
Tower.
just immigration on the residential tenant base. It's immigration of capital into the New York City
I mean,
marketplace,
in
which
2000,
is
in
keeping
2003,
pricing high.
the largest transaction was the GM building, 1.1 million square feet. It sold for $1.4 billion.
Brilliant buy.
Brilliant. $790 a foot. Brilliant buy that you wish that you bought. A year
Exactly.
ago, everybody said that the
In
person might have.
hindsight, genius.
I would have lent $700 million on it.
There you go.
You would have lent $700 million.
500.
500 million. It just changed. This year, Scott, being one of the leading sales brokers, capital market brokers, had an entity who bought the Fame Plaza Hotel, $675 million, 807 rooms,
Right.
approximately about $825,000
Per key.
A square
key.
foot.
And when they convert
And per
part of
key.
it to residential, it's going to be a home run for them. They're going to make
Absolutely.
a fortune on that.
But he's
building.
closing the Oak Room, which really bothers the
In
hell
fact,
out of me.
when it's done, they should send Scott a bonus for selling them the building.
You mean it was such a good price?
Yep.
At $800 a square foot, with condominiums expected to sell in that kind of a property at $3,000 a square foot or more, there's a lot of room for profit.
And the retail on 57th Street, 59th Street rather, is extraordinarily wealthy.
Well, isn't the story
Valuable.
he's going to turn the Oyster Bar,
Yeah,
the Oak Room, and the Edward into retail?
absolutely.
Yes, and he's going to convert the ballrooms into multi-level retail.
It's going to be a
also.
home run project.
So that's going to bring the value or the cost of the residential down significantly.
And don't forget, it's going to appeal to a lot of foreigners, a lot of Europeans, with this 35 or 40% discount.
What happens? What happens when the
And it's
Euro?
the prettiest hotel in New York.
What happens today? The Euro, the Europeans are running into the city. I was with the hotel people yesterday, the Hotel Association. They said they've never 60% of foreign travelers because they're really, they can buy anything over here.
It's terrific.
What happens 9 months from now, a year from now?
I think it's in the residential purchase, and it's just starting. We've just started to see Europeans buying condominiums here. We thought it would happen 9 months ago, a year ago, 6 months ago, 3 months ago. It didn't happen. It has just started. So I think it has a way to go.
I mean, Prudential Douglas Elliman is one of the largest in New York.
The largest.
The largest real estate sales broker and a variety of other things out on the island, everywhere else. How many units are being sold in residential per week? Any idea?
Well, I tell you, we're going to sell this year $10 billion.
$10
This year.
billion.
$10 billion of real estate. Yeah.
And the nice part is they come here, they buy Levi's, they buy sneakers, they buy everything we have to sell, and they live here. And even if it's only short term, I think it's terrific.
What about, let's leave
Plus
them
the
in.
Europeans are getting a 30% discount.
Absolutely.
So
Are you getting 30% discount when you bring in the money? No, I'm not being facetious. As a lender, because your money is coming from Germany. I mean, you don't have a deposit base in America.
yeah, I source my money in the United States, so 150 over LIBOR is still 150 over LIBOR in any language. But I like the thinking.
Yeah, I was trying to, you know,
He just says
be
a lot
responsible.
LIBORs.
Michael,
Yes.
we're all very optimistic, I think, in the comments today. I don't want to throw cold water here, but just because things are good, just because people can afford to buy here from Europe, that doesn't mean things are going to go up 20% a year, whether it's buildings or residential. We all got to be realistic that a little bit cautionary, that it's not the worst thing in the world if things slow a little bit, momentum slows. It's still positive. I think that could happen
prior
if
to the
rates go
show,
up.
On the
Tom,
brokerage end of the business, that's probably a positive, not a negative.
but prior to
Absolutely.
the show, I believe, I'm not sure who mentioned this, the quote was that too many people feel that real estate today is the ultimate investment.
People think, and this has happened in the past, in the mid-'70s, it happened in the mid-'80s, in different forms of capital, whether it was Japanese capital coming in the '80s, the syndication capital in the early '80s, the real estate investment trust in the '70s. Whenever you have an investment that everyone thinks you can't lose on, because every Friday night you're going to a cocktail party and hearing how your friend made 20%, that usually means you're reaching some sort of high in a market. That doesn't mean that there's a cliff over there, that the market becomes a disaster, but I think our viewpoint would be a little bit more caution, still be optimistic, find the right investments, and still there are positive things happening, and there's a lot of fundamentals. You get to the office market, I think rents are going to move up. It's been soft the last 4 years in office. We're due for a correction. We made a major bet on an office building in Lexington Avenue with the help of Scott's firm, where we expect, to lease 1 million square feet coming up at the end of next year.
But what do you expect to lease, for our audience? What are the rents in this building? This is a two-class building, 485 Lex, 750
Third
Avenue. What do you expect to rent those offices for?
Well, we would hope to rent those offices somewhere between the mid-40s, and if we listen to our Cushman & Wakefield friends, that is liable to go higher by the time we deliver space next year.
And since Norman, besides being an owner, also has a brokerage, I don't want to put words in your mouth, but I think that property conservatively could rent out at $40 to $50 a foot.
Tom's?
Yeah.
Easily.
And 12 months ago, I think both of these gentlemen would have been much more conservative about their estimate about where rental rates would be. The market is tightening with respect to vacancy, and I think if you look at specific segments of the marketplace, for example, the large blocks of space, there are not very many large blocks of space, and a building that Norman recently bought, I think, will target that same tenant base. And with each month that goes by, they have fewer and fewer options to look at
today,
as corporate expansion starts to take place.
Today we really don't have too many speculative new office buildings being built. You have 330 Madison Avenue, which it's not a new office building, it's a renovated office building. You have half of the New York Times building. You have Statsky's building at
Top of Bank
42nd
of
Street.
America Tower. Yeah.
Half of the Durst building, which is on 42nd Street and 6th. Then you have the Freedom Tower. I mean, those are your midtown buildings that you have over there.
Time Warner.
Time Warner Center.
That's fully leased.
That's done.
fully leased.
Yeah.
The last piece
The fact that we can even name the few buildings that are available for lease is a pretty significant factor when you look at the last cycle, where we had 35 million square feet of space delivered at the tail end of the market cycle. It's a much different
that space
dynamic.
is all going to be delivered in 2007 and 2008. Very little in 2005, 2006.
What do
And
we
I
think about Lower Manhattan? This is for everyone.
Lower Manhattan, there actually have
Nice
been
place to live.
Lower
Wait a
Manhattan.
second.
It's a nice place to live.
It's not a nice place. Lower Manhattan, Wall Street.
I said it's a
the
nice
heart
place
of business.
to live. It's beautiful.
The heart
A
of
nice
business.
place to live?
Battery
That's
Park
where it's
City.
Are you
gorgeous.
saying it's not a place to work? Not
It's a
that-
nice place to live. Battery Park City's beautiful.
New York
Overlooking
City
the Statue
started
of
as
Liberty.
Lower Manhattan is a nice place to live.
The
It
trades
still
that have
is.
occurred down there, and Scott has been in the middle of a lot of them, there's been tremendous activity, first converting to rental, and then switching in the past 12 months, 18 months to condominiums, selling at prices I think that everybody is surprised at. The buyers of those
Look at
buildings.
15 Broad Street, Boymel Green's
Right.
project.
Yes.
But
I mean,
it also
15 Broad
does-
Street, you're right next to the exchange.
Right.
You have the guys with the Uzis.
Can't drive your car in
You
front
can't
because they
drive your
stop
cars.
there. Right.
You can't get anyone. You probably couldn't get a delivery because
And
they're
everything
gonna
is
stop
over,
you.
and everything now is over, well over $1,000 a foot.
And look how many buildings
Now.
they've taken out of the marketplace, of the commercial
Yeah,
marketplace.
about 65 buildings have been taken out of the market.
Well, but if you times that by the footage that you've taken out and then just
13
add-
million square feet.
Well, but you didn't count 13 million square feet on new commercial buildings being built. So the equilibrium is not only being kept, it might even be being absorbed.
Yes.
Well,
So
you don't
that-
think people ever heard of Jersey City?
No,
Brooklyn?
that's a foreign country.
Oh, Jersey City is a foreign country.
Yes,
Westchester?
still. Not as foreign, but foreign.
People want to live in the city.
People want to work in the
Residential,
city.
they work in the city, they want to live in the city. And that's why 15 Broad is a big success, because people work in the city, they want to live there. And when you look at the pricing, and you find out that Brooklyn is $800 or $850 a foot in Williamsburg, and they could
Now,
buy
let's
at
talk
15
about-
Broad Street for $1,000 a foot, a lot of them rather be at 15 Broad Street.
With
The
the
downtown
exception-
market is a great bet. Great bet. 50% of pricing that you would expect to pay in Midtown, the market is transitioning towards the attractive market that we enjoy in Midtown, being a 24/7 town with thriving activity around the clock. That is a new phenomenon for the downtown marketplace.
And if I can say, Michael, if any politician is listening to this program,
They
please-
all listen.
please keep the subsidies on, because the day the subsidies stop, I think the music stops downtown for commercial office
So what
buildings.
I'm hearing is that, which I'm very keen, and everyone knows this who reads my articles, who watch the show, that Lower Manhattan has always been a low-cost alternative. You can save $15 to $20 a foot. The amenities are finally coming in to Lower Manhattan. But what Norman just said is that if they take away those
subsidies.
which are planned to expire on December 31st, then we're not going to rent these spaces.
Well, we're
then
not gonna rent them
then
as
the
easily.
buildings that you're selling, and I think this is a good example. Tomorrow they're closing on one of the buildings that you're selling, 110 William Street. Very good building, really good owners buying it, a guy who's truly bullish on Lower Manhattan. He's planning. I mean, you own a building. You don't rent these buildings overnight. If December 31st, 05 happens, which, things come overnight, and he doesn't have these subsidies.
04.
Oh, no, it's 05. I'm talking a year from now.
Yeah.
The subsidies, he can be sitting there.
The velocity will slow.
Yeah.
I think the
It's not gonna
space
go out
will
of
still
business.
lease.
Of course it will.
It won't lease as quickly. It'll take a while
What
for
about- but we have
the
a freedom.
Midtown market.
We have a Freedom Tower going on.
7 World Trade Center.
We, 7 World Trade is already the glass is up. It should be ready. I know that your colleague, Mr. Mosler, who's in London today for our program, felt terrible that the assignment went to C.B. Richard Ellis, did not go to Cushman and Wakefield. But that building has no tenants right now.
It is one of the few speculative construction buildings in the
Speculative
city of New
construction
York.
building has Liberty bonds, had insurance proceeds. So speculatively doesn't. It could be speculative for 2
Well,
years.
that's going to be a good test of
Excuse
the
me,
attractiveness
that's
of the
not
downtown market. That's going to be a good test. A major tenant goes in there, a major commercial tenant, not a government agency. From the standpoint, that'll be a very good test and be a very big positive kick when that happens to them. They will find a tenant.
For our audience, Tom, who at one time was a former banker, who ran one of the largest real estate REITs and an entity of MetLife, is now with an entity called the City Investment Fund, because there is something called the City Investment Fund, which is by the partnership. The City Investment Fund has Morgan Stanley and the Fisher family as general partners.
That's correct.
And then you have 2 major New York City, New York State public pension funds.
That's right. as our investors.
As your investors. And under what I was reading, your investments must be in the 5 boroughs.
Five boroughs, and we do value-added type of investing, which means we invest in either repositionings of properties, new construction of properties, working in partnership with developer, operators, managers in all our investments. And we do it in all 5 boroughs, and we've made some investments in the Bronx.
What type of investment in the Bronx? Because, you know, all I hear was Manhattan right
Well,
now.
again, we'll talk about the boroughs a little bit, but there's a lot. We're making an
We'll find out if
investment
Fitzgerald will have a land.
in a very good residential section of the Bronx for a new condominium development. We're just going to be closing at the end of the year a purchase of 1,400 moderate income group of apartment houses, and that is an apartment house complex that had some renovation. We'll continue and spend $7 or $10 million.
But I think for our audience, which is really important because we have all 5 boroughs, plus people watch us on the internet, what will these apartments rent for? Because people want to find out we're affordable. We know how to sell them units.
These are affordable apartments. These are renting for $750 to $1,000 from the standpoint for 2-bedroom apartments. These are families who have 2 people working in them, commuting either to Manhattan.
Those apartments are not affordable. Those are below the affordable apartments in the new buildings that are being built for affordable. Because a 2-bedroom in any affordable, based on the HDC deals, rent for even more than $750.
This is not new construction. These are existing 40-year-old buildings that have an existing tenant.
If you've seen the way these construction is done in these new buildings, they're similar construction. The other ones,
these actually have plaster walls and are built correctly, and it's a matter of modernizing, the units.
There's concrete,
upgrading the kitchen. That's exactly right. You go to talk about Brooklyn, amazing value creation going on in a borough like Brooklyn. And I've got to compliment the City of New York and the City Planning Commission and some of the things that I think are very positive, making it easier for the real estate industry to gauge what the city wants out of owner-developers. And they're about to complete a rezoning of a major part of the Brooklyn waterfront over there that will create really an opportunity to build thousands of units on prime waterfront property. And the values there and the ability to both build market rate projects and generate very large taxes for the city, which is what needs to happen on property that right now that's derelict warehouses and things like that, is amazing. And values in that area have moved probably 4 times in the past 2 years from the value of that land. And it's about to go into the active stage of building. Same thing's true in many areas of Brooklyn that I haven't visited for 25 years when I was a young lending officer at Chase.
Isn't that the equivalent of Section 8 housing?
It's equivalent of Section 8 housing. You're talking about housing that's
talking
going to look at
housing.
Manhattan that's going to sell for $800 a foot.
I mean,
George Klein's project that he's going to do in Greenpoint.
But no,
it's going to end up being thousands of units.
But the interesting item, I happened to be with George the other day, is that the plans that they want in Williamsburg and Greenpoint is that they want the developer to put 40% in affordable. And if they put a 40% in affordable, the developer cannot do the deal. It doesn't work. The financial mechanisms do not work. The 20% can work, and that's why George and Jeff Levine, who will be on the show next month, really have difficulties. But prior to the show, you stated that, I don't want to age the people over here, Belfonte is much younger, and Latham, he's prematurely gray, but there was an entity called Schaefer Beer, and Schaefer Beer was in Williamsburg. And Prudential Douglas Elliman is a selling agent for the market rate units of a very unique combination, limited equity co-op and other program. And you were saying that, how much are they selling for?
$800, $850 a foot, but it's waterfront also.
It's waterfront, but...
Waterfront is waterfront. You're always going to get
great views of the skyline.
Beautiful views.
And what about, how do you get to the city?
Well, there's a ferry service that is
What happens after 6 o'clock for the ferry service?
Well, I
go over the bridge.
I say that you're right. The bridge, public transportation. I guess you probably have to take a bus to the train, walk to the train,
subways, yeah.
to the subway. Not that far.
I think somebody who they always consider.
But it's beautiful. I mean, if you go there and stand there and look,
the view is better this way than the other way.
Of course. I mean, it's just the most spectacular thing you ever saw.
Let's go to another.
That's what I said to you earlier. There's almost no bad neighborhood left.
Howard Rubenstein
in the boroughs.
Is
By the way, did you see
basically
the
said the
article?
same thing.
I think it was in Sunday's real estate section at Times. about Washington Heights, right? Same phenomena. Long Island City, probably the next area.
What about
Long
the
Island City
Watchtower?
now? Citicorp is starting their second tower. They dug the hole. Second tower residential. You know,
No,
you're probably
the second tower is not residential. The second tower for office.
for office. I'm sorry. Residential, you're probably talking $600, $550, $600
There,
for Long Island City now.
I'll give you the example. I happened to be, and he was on this show a couple of months ago, Patrick Randall of Fremont. And Patrick, I use him to find out what's going on. Maybe Scott will give me some insight in the market also. And there is a building called the Eagle Electric Building, which is right at the entrance to the 59th Street Bridge.
Right.
And a developer who I believe at one time Mr. Fitzgerald lent money to, he paid you back even.
Everybody does.
I know they all do. Is that because of your demeanor? A developer is planning to take this building, which used to house Eagle Electric, which moved most of their operations to Mexico. And the idea is he's contemplating the sale of these condo units, convenient to the 59th Street Bridge, very convenient to 7 subway lines.
Right.
But the lender said to me, I said, Pat, why aren't you doing the construction loan? He said, I don't know if the property could realize $550 a foot. But in today's market,
Probably can.
it probably can. You know, taking what Douglas Elliman in the numbers, $550 a foot is a great deal. I was at a lunch today, and I ran into a guy who, if everybody remembers Maxwell House in Hoboken, this was a property that lay dormant for years because of municipalities and a variety of other reasons. He said yesterday they had the approval from the Attorney General to go out into the market and offer to make the phone calls. They had to close the telephone lines. This is a Pulte Home, Toll Brothers, and Maxwell. Hoboken is selling at $550 to $600 a foot. You know, Avalon Bay is building their second building in Jersey City, in Long Island City.
But there's also, you go out into the neighborhoods of Brooklands and Queens, you have ethnic groups who have lived in these areas, and the creation of value, the upgrading, the improvements. You go to Flushing, we're a finalist in the sale by the EDC of a 5-acre parking lot.
Great piece.
You know, that the city has put out for an RFP. We happen to be one of the final 3 to build a combination of retail, some offices, and probably 500 to 600 condominiums. Right. And the demand there from the population there would be tremendous for what would be considered affordable housing, you know, from the standpoint relative to Manhattan. And if we can win that, we'd feel very confident. We're looking at opportunities in Staten Island for creation of homes that are $500,000 to $1 million that have water views. We're actually having a discussion in Coney Island, which has had, you know, a very difficult last 10 years, where a developer has tied up quite a bit of some of the open space and wants to create a retail urban entertainment zone.
This project in Flushing, we have an office, the largest real estate office in Flushing. They call every day wanting to know what we know about this project. They think they could sell those 500 units in, months.
But what's happening, I mean, if you look back over the last few years, we've had record low interest rates, and we've taken home ownership in the United States. I think we were around 63%,
Right.
62%. I think we're past 70%
Just past
now.
70, right, Jim.
So you have so many more people can qualify for home ownership. So it's the American dream, owning a piece of the rock. More and more people are interested in owning their apartments, and that's what's driving all of this. We've had the benefit of record low interest rates, the lowest in my lifetime.
And
Another good example, coming back to Manhattan,
Yes?
of zoning, which I think, again, it's been politically charged, as big rezonings are, the west side from the standpoint of 42nd Street down to 34th Street, and really recreating the zoning to, you know, high-density commercial, office, hotel, and residential. The state legislature just passed the authorization to expand the Javits Center and to build a hotel convention center on 42nd Street. And again, I'd be interested in Norman's opinion. You know, the answer is assuming that gets started, assuming they find the money to extend the 7 line. Forget about the Jet Stadium; that's a separate type of issue. Do you think developers, owners, office owners like yourself will go far west? Do you think you can get tenants to pay the rents to build out that dream anywhere in the future?
Yeah, if you get transportation.
If you get transportation.
That's the only thing it needs.
But will the 7 line be sufficient transportation for the west side?
They've talked about a shuttle. They've talked about a surface transportation going up and down 34th and 42nd. There are private companies that do it. When we're having problems and you want to get across on the ferry, I forget the gentleman's name who owns the ferry service.
Imperiale.
Imperiale. He's got free. Imperatori.
Yeah,
Yeah, now you are showing your age. He's got buses that go around the city and drop you off for free and pick you up for free.
Lenny Litwin built a apartment house on 102nd Street. This is Glenwood Management, 102nd and First Avenue. He has a shuttle bus that takes people to the subway.
Mm-hmm. I was going to suggest that when you talked about the Schaefer site, you just get a shuttle bus service, whether it's for free or for
the
charge.
irony for our audience is that when Lenny Litwin built the Pavilion in the mid-'70s, no one really went to 77th Street and New York Avenue, and he provided a shuttle bus to the subway, which he still provides, and I mean everybody wants to go into that building.
But even without it, take a look at Chelsea Piers. Everybody left.
Chelsea Piers is probably, in my opinion, the greatest story. Nobody wanted to be at Chelsea Piers.
That's correct.
It was a total failure. Jeff Levine is now building a residential building on 23rd Street, right where they're going to build a Costco.
Mm-hmm. It worked.
It worked. The rents on 23rd Street and 11th Avenue for an apartment are more expensive than 57th Street and between 2nd and 3rd.
There.
No, they are in the rental rents.
57th and 5th, right?
Not at 5th. 57th and...
Okay. What I'm
Third.
suggesting to you is what Tom said. If they expand the Javits Center, and I thought they had the approval to do it. I don't know about the money, but I
The
certainly thought
Javits
they had the approval.
approval has been done and the
Yeah.
money has been done. So
Okay.
that's a definite deal that's going to happen.
And a large hotel convention complex connected to it, which is major. I counted up the other.
That's
There
key.
are 15 major projects, starting from 8th Avenue in front of Port Authority, where the New York Times Center is going up, and Jim's part of the lender there. Milstein has a site running to the river. 15 major projects owned by developers and companies of great substance, like, you know.
3 weeks ago, I wrote an
unbelievable.
article that appeared in the New York Sun, and I spoke of 6 developments on 42nd Street.
This is 40. There's 15.
500 condos by Port Authority.
I mean,
Right.
well,
You
there's
have
15.
500
It's a-
condos directly next to the Port Authority, next to the post office and the Port Authority. I mean, there's a lot of developments. Most of them are residential, with the exception of the Milstein property, which they don't know what they're going to do. That's, of course, for
You've got
Port
Forest
Authority.
City just south of there.
Forest City, which you
New
lent
York
money
Times,
on.
Yeah.
On the situation. I'm happy that we're all positive, but there was an article, there's a great publication, globestreet.com, and it said, investors see trouble brewing. Record building prices will come back to haunt the industry. That's the word from a couple of investors, that the record low cap rates and the interest rates can't last forever.
Those are all investors that haven't bought anything in the last 2 years. Said the
Correct.
same thing 2 or 3 years ago. What do you want it to say? We were stupid?
Yeah. Jackie
Exactly.
Mason has a whole bit on it, and it's I could have bought it, but I didn't. I should have did it, but I didn't. And I woulda, coulda, shoulda. And these are the people that haven't invested and
Are you
possibly
saying that
understood.
HRO and Paramount and these German funds or European funds?
Is Paramount back in the market now?
Paramount stepped up and bought some stuff
Sure they did.
a couple of years ago. I mean,
No, Paramount didn't do anything for a number of months. Jamestown. I'm not, Paramount, I apologize. Paramount.
Paramount bought 712 a couple of years ago.
Right.
They paid a very high
RFR
prices.
just bought the Sotheby's site on Madison Avenue.
Well, one of our affiliated companies was involved in, and I don't know if you brokered the deal, but they bought 717 Fifth Avenue. They held it for a while. They paid a record price. Everyone thought they were crazy.
Right.
And now they've resold it
They
at
sold
another
it a
record
big
price
profit.
and
Big
made a
profit.
fortune.
Listen, the fact
Exactly
is,
so.
anything you didn't buy in the last 7-8 years, you look stupid, and anything you sold, you look stupid.
Yeah, but
That's
the
where
fact
it's
is
at.
there is some truth in what that statement has there, that you can't take the last 5 years or 3 years and straight line it going forward. You got to have some caution. There are cycles, real estate cycles. Interest rates, I think, are especially key to the real estate industry. Everything is leveraged. A lot of it's leveraged on floating
but you know what I
rates.
think it's really important? in the mid-'80s, when all of these apartments were being built, there were so many being built. And then when the market went down, there was a surplus. Today, we hear of a number of buildings being built, but they really don't have that much volume in number of units. We were talking prior to the show about 823, 825 Park Avenue. There's going to be 12 units over there.
Exactly.
So what are we talking about? Even the Time Warner building with the condos, there aren't that many units over there. I mean, we don't have the 600-unit new condominium conversions. I mean, even the property that we were talking about near the Port Authority, part of it is going to be rental and part of it's going to be condos. So people are trying to, make their lives a little easier.
The real estate market has cycled at some unsettled period of time for time immemorial. Look at the older families that have never sold. Look at all of the Tishmans and the Rudens and the whatever. Times are good, times
one of
are
those
bad.
families sold today. Yesterday, the Resnick family sold 20 Pine Street.
And what does he keep when he sells 20 Pine Street? The other 300 buildings? My point is that if the market goes down, the only time you lose, it's no different than in the stock market, is when you sell. Right. And as long as you're not undercapitalized or over-leveraged, you just wait it out. When my son went out to St. Louis to go to Wash U, he said, if you don't like the weather today, just wait. It'll change tomorrow.
Norman, the answer is you mentioned those names, but I totally disagree with you. I think there are more people in the market borrowing more money than we even realize. The families, the Roses, the Rudens, the Fishers, you have great, and some of the recent new players who have come to the market after the Depression in the early 90s have made a lot of money. They have some staying power. But I'm telling you, I have people come into my office every day, are doing their first project. They're leveraging the 95%. They're inexperienced.
But that was the last half of the statement. If you're not undercapitalized and you're not over-leveraged, you just wait it out.
But I think that's the minority of, I think it's
So
the
what
minority
Tom
of
is
new
saying
buildings. I'm saying
is
a lot
that
of the new
there
stuff
are a
is
lot of people,
not these guys.
You know what? It's a very interesting.
I'm lending my money to Norman, by the way.
I know.
The Roses aren't building for their own account. They're building for other people.
Yeah,
the
Roses
Rudens, you don't say building. The Fishers aren't. This money is conservative money investing. A lot of the new construction is by some of the new
There's not
players.
that much new construction.
Well, again, I can't, there is relative to the past. You go to Brooklyn, you're up to 5,000.
You're talking about residential?
Residential, 5,000 units being built. That's
As
up
a
from
percentage
1,500.
of the stock, though, it's de minimis.
Not high. I still say caution. The answer is it doesn't always go up. I think there's more leverage in the market than
Just don't
people
sell.
realize.
You're absolutely right.
And
Yeah, but
I
what's-
don't think if rates go up, people will be able to hold.
We've
A lot of these guys
been
won't hold.
profiling
They're
mostly in New
undercapitalized.
York, but we have Michael who's been, who wants to come to New York. Here's a developer who's owned property in Connecticut. Norman doesn't know what Connecticut
We offered him
is.
a lot of properties at dinner. You didn't take any of the prices.
We're about to sell Michael properties. He's here, and
we're still
Anytime,
negotiating.
part of the
Excuse
Stoller
me, there was a
report is,
price and a check.
is
Look at my fee right now.
I have never seen so much negotiation prior to dinner on what the projects are going to be. But Michael, you have property in Connecticut. You have property in Indianapolis. We don't know where that is. Cincinnati.
Yes. Massachusetts.
What's the world like there? I mean, even though we can't talk too much about
We have
it.
some good
Just
loans
to
in those
address what
cities.
Tom said, I think as rates certainly go up, there's going to be a pressure on cap rates. And the pressure is for cap rates to go up, and I think you're going to see that. But I think you have to look for isolated deals and isolated opportunities. Value added, as Tom said. You have to look for opportunities like that. And that's typically what we do. Why do I like New York? I think New York is a brand. I think it's a fantastic city.
You mean it's like Howard's good friend?
It's like Coca-Cola. And everybody wants to be here. You travel around the world, you say you're from New York. I don't say I'm from Connecticut. They say, where are you from? I said, New York. And why? Oh, I love New York.
You pay taxes here for saying that?
Not yet. Everybody just loves this city, and there's a huge demand. And when we talked about immigration before, people want to live here. And it's a fantastic place, but I think you have to be cautious. We're not going in just buying. We're going in hopefully buying carefully.
But we were talking earlier in the day that you're looking at a property on the west side.
Correct.
And it's
We're not mentioning addresses.
No,
here.
without mentioning addresses, without mentioning
Even
it's
locations.
a different broker than you. He was looking at a property in the West Side, in the 70s. We can say in the 70s and the 80s, in the north near Broadway and so on.
And the cross street is,
What's a cross street?
and it's a 14-story building.
David
won't know
Warner
where
is
it
up
is.
there tying up the deal right now.
Zeal Feldman, David Werner, they got it flipped already. Okay,
Troy Offer's not here.
Ofer was supposed to. He's already selling and buying it. But here's a building, and here is a guy like you, who wants to make his first acquisition in the Apple. He comes to the Apple, and he may go to an entity where you have the funds. You have a $700 million fund, which can increase over there, and I think this is a good use. Here's a property that is, there may be some control, there may be some stabilized, and there's some market rent units. The property that Tom recently purchased for the fund with RFR, I believe all the units are market rate.
All market rate.
So it's all market rate. You can do a market deal and you get your 15%, you're in pretty good shape. Here's a building, I don't know what the numbers are, and whoever's selling it to you is selling it to you in a manner of what Howard was saying before. You can get $1,000 a square foot in the West Side. And you probably, I would not disagree.
The only way this deal works
More.
is as a condo conversion. You
No,
can't
no,
certainly-
no,
it
I
certainly
agree.
won't work as
No,
a rental.
I
The
agree.
yield is about
He's highlighting the challenge.
3%.
I'm saying there's no question that you will sell the units at $1,000 a foot for the condo conversion. But what happens to those other units where the person has been there with a rent of $175 in the rent-controlled unit or the stabilized unit?
But you know the theory. The theory is if you could sell enough of them, it's like a condo hotel conversion.
you have
If you
to-
can sell enough of them to get your cost out, and then you own the rest of them.
You
And
have
if
to
not,
bulk-
he won't do the deal.
Exactly.
You
If not,
have
he's
to
not doing
bulk
it.
sale those units at the end of the transaction. But more importantly,
Oh, you're kidding.
it's less than 100 units, and we think we could do it in a relatively short period of time, 2 years, 2.5 years. And I like the 2.5-year horizon here in Manhattan. I don't necessarily like the 5-year horizon. I don't want to be there selling condos 5 years from today. But 2.5, I'm safe with 2.5, and we could start selling after about a year, which I'm comfortable with.
Fine.
So-
So we're just trying to get an
So I'm going to
opinion
call
over there.
Tom tomorrow.
Right.
Commission for you.
No question. No, I
And
mean,
we're going
but-
to do the sales for you. Right?
They're gonna sell.
No, but you know what? Here's an idea. We're talking about different type of items. We've profiled office, we've profiled residential. We really haven't profiled what my leading experts feel about retail. What's happening in retail in Manhattan and the boroughs?
I love it. I
Been
love
a
it.
tremendous
We'll do as much
influx of both what they'd call big box retailers. These are some of the Costco's of the world, the Home Depots of the world, the Targets of the world. You take
The
this,
Target in Atlantic Terminal is probably in the top 5 Targets in the nation.
well, you go to, again, back to Flushing. There's a developer called Must Development who's owned a site very close to right downtown Flushing. He's owned the property for 30 years. An associate of mine was his lending officer who lent him money on it 30 years ago. It's now coming
Josh,
through.
who's been on the show, who's going to be on probably next month.
Well, there
he
you
always,
go.
He always takes his
He's
deals.
about to sign up 3 or 4 major retailers to develop on this site that has basically been grade C industrial, collecting rents, and then to do, I believe, up to 800, 900 apartment units on top of the platform. Now, here's a creation of value for the city of New York. The taxes that are paid, I'm sure, going to be 15 times what's being paid today. And an example of retailers willing to modify the way they do business and go away from the standards to fit into an urban environment. And this is going on, whether it's Manhattan, whether it's Queens, Brooklyn, all over the city on the big box. And then you get you just walk up and down some of the better retail avenues. If you walk on Fifth Avenue, you always see 2 or 3 stores where a flagship, someone's spending tens of millions of dollars to do a new flagship store and paying what? 700, 800, 1,000,
1,100.
800 foot. So
You getting $1,000 for your stores?
I just did it at $125.
right,
On the other
Norman's
hand,
not in those locations, but the
we're not in the upscale neighborhoods. On the other hand, we run 5 million feet, and I don't have a retail vacancy.
And
Yeah, I like retail, with all due respect, I like retail better than office today.
You do.
We just concluded 420 Fifth. We did the ground floor retail there. It's actually two levels.
420.
Comp USA and Obampon.
Which was a retail
like in the
condominium.
40s.
Retail on the
Condominium.
investment side, the demand for retail condominiums is like we've never seen
There's
before.
not a lot around, though, right?
There's not a lot. There's a scarcity value.
Vornado just closed on a retail condominium in Soho on Crosby Street.
Correct.
They paid basically $1,850 a foot. Retail is...
Since I'm across the street from 420, and I knew the conversation happened, what happened to Comp USA?
Nothing happened to Comp
nothing.
USA. The Germans that owned the
condo.
retail condominium
Sold it.
just sold it
Oh, but the tenancy stays.
to
Right.
a
No,
agreed.
I financed the acquisition
Okay.
to one of our German customers. It was a German
Oh, it was.
owner, and they sold it to one of our German investors.
I see.
Actually, it was a Greek shipping investor. But, I mean, we did Hammacher Schlemmer. I did that a few years ago. We're
57.
seeing a lot of retail that's adversely encumbered by these leases, where the rents will go up 300, 400, 500%. So the play there is, if you buy something at a 5%, a 6%, in that range, you have to have some patient money, but it's very clear
But enough tenants that can afford to pay the 3, 4,
that
500%.
when that lease expires, you've got a huge increase.
I remember when going back when we originally met a number of years ago, you had lent, it was after we met, you had lent money on this, the Polo building on 72nd
Mansion,
Street.
yeah, $33 million.
Which everyone said, hey, you were crazy, but it was never crazy. It was a great deal, and Polo's still been there, and it's, it's
still paying.
it's a top-notch
I'd like to
location.
own it.
You'd love to own it. I mean, Madison Avenue, where
Another
RFR...
German owner, isn't it?
I backed
think it
an
was-
So
Irish
it's Japanese.
company, public company. I don't know who owns
I
it
think
now.
it's German now.
Is it?
Yeah.
I live at the Westbury, and that retail space was sold, last year for
Correct.
a phenomenal...
Something just
Cartier
traded there.
is
We looked at
phenomenal
it.
number.
Norfolk Bank financed it. It was a $5,000 per square foot
Right.
trade.
A lot of these
Madison
banking,
Avenue.
regional banks and some of the banks consolidated, but a lot of what were vacant spaces 3 years ago gobbled up by Wachovia.
I mean, you got
North
Wachovia,
Fork.
Commerce.
It's amazing. They took a lot of
WAMU
locations.
up to a point.
Yeah.
WAMU has dropped their
Yeah.
space, but it's going
We
on.
also have new retailers coming in. In fact, south of 42nd Street, there's some new retail coming in on Fifth Avenue.
We just put sales in.
Okay.
And they weren't there.
I-
we went
Retail
out
rents
searching.
have gone up and are going up. Demand is strong. And on the investment side, there's no shortage of capital to buy
Let's get to the Bowery.
the Bowery.
The Bowery. Let's talk about
You're
the
on,
Bowery.
Scott.
I mean,
Thanks, Norman.
I think
There's a great
think
Jewish deli down there. I forget the name.
I think my audience would be totally surprised, and maybe my guests, that on the corner of Houston and Christie Street, Avalon Bay is building a series of rental apartments. They have the New York State
Near Sammy's Remain.
retirement.
New York State Common is
The
their
New York
partner.
State
Another
partner.
fine New York
Exactly.
institution.
The rents on the market rate units will probably be the same rents that they will be in Midtown. The rents are going to be, they're projecting close to $50 a foot. So a 1,000 square foot 2-bedroom apartment would be $50,000 a year, which means it's $4,250 a month.
Right.
They
4167.
41.60.
And incidentally,
We'll
the
go back
rents
to our
on Wall
housing days.
the rents on Wall Street are the same as
Right.
as those.
But the interesting thing is that Whole Foods has signed the lease for their largest store ever in the Northeast, 75,000 square feet to be over there. And they took the entire first and second floor, and the second floor is where they're having a cafeteria, their restaurant, so people can look over and look down the avenue.
But doesn't that fly in the face of the doomsday and the
I'm not here
doomsayers?
for doomsday.
No,
I'm
you
just,
read me a quote by some of the people, the end of the world and people who aren't smart and can't hold out. But this flies right in the face of that.
Well, but the quote he read to us, I think, as somebody pointed out, was a statement made by a company that has not been able to buy real estate for the past 12 months to 18 months because their return criteria are out of line with what the market is delivering right now.
Avalon Bay could also lower their rents if they don't get it. I mean, they have the wherewithal and the horsepower to weather a deal like that. I'm not sure if
And the
they'll get
land
those
price
rents.
on that project is a lot low. That was not
Very
a
low.
great
What is the
area.
land, what is the land
I
The
price?
land
can't
price
say-
is
50?
equivalent because there's a lot of there's a social community space, so
Right. It was a
everything.
very
when you,
complex
when you
deal.
take everything into consideration, plus it's on top of the subway, so they had to reinforce the
Right.
concrete. The effective land cost was $100 a foot.
Okay.
In today's market,
It's cheap.
It's Long Island City. It's Long Island City price today for development
That's,
site.
Bronx-
$100 a
Bronx
foot.
is not getting too
$100 a
far
foot.
away. But the Bowery, the Pomerantz family is building a triple condo. They're going to have retail on the ground floor. The people who own 60 Thompson Street, they have retail. Then they're going to have rental, and then they're going to have condo, and then they're going to have a hotel, and that's on Allen. And the Surface Hotel recently opened. I think the basic comment is, which is written in my article, which will appear in tomorrow. I basically say that nevertheless, based on the relatively low interest rates, high availability of funds by people like you from lenders, as well as the increase in the number of investors looking out there, the outlook seems bright for the continuation of record sales of commercial and residential buildings in the region. I
Agreed.
think 2005 is going to continue in this situation. I think even though the Fed rate may have gone up a little bit, effectively the 5-year Treasury bill is the same as it was last year. The 10-year Treasury bill within 10
Residential mortgage rates are still.
the residential mortgage rates
Low,
are still
yeah.
there, and it's a reasonable time. If you had to look at the 5 boroughs, where do you see 2005, 2006 as the best investment for a residential individual who's watching our show? Where would you give them advice and guidance? We got 5 boroughs here.
Central Park West, Mayflower, buy a unit there.
Here, here.
Very few people can afford that.
Now,
As the lender on the project,
All right.
no, as the broker, no, you didn't sell it.
I didn't sell it, but
Best
I
piece
do
of real
believe it's
estate
the
in the
best.
United States.
It's the best development site, certainly in New York City.
For our audience, this is a property. The Mayflower Hotel had been there for years, plus a vacant land. It was sold effectively for about $1,000 a square foot. It's across the street from the Trump building, and it's also across the street from the Time Warner building, but it has something even better. It has Central Park directly on the property. It's probably the best site
In America.
Now that's
Manhattan.
$1,000 per buildable square foot.
Right.
Not
Not built.
per square foot of land.
Per buildable.
That is per buildable square foot.
FAR, yeah.
Enormous.
New record.
New record.
Well,
And
that
you
won't be-
lent on it.
Plus, you have to
That
knock
won't be
down the
delivered
building.
till 2008. I don't know what the world is. I think some of the
No, it'll be
developing
sooner than
areas
that, Tommy. It'll
in
be sooner than
Queens
that.
and in Williamsburg and Greenpoint and some of the, I think there's tremendous.
Do you think the Bronx-
The Bronx has certain attributes, but I think, again, that's very limited in the sense of for sale condominiums. We've made an investment in Riverdale. We think that has a real move upward right now. Things there sell for $400 to $500 a foot. Maybe that will move upward. But I think some of these boroughs have still
I
moved
I
more
think Tom
percentage
has the
movement.
benefit of knowledge in the boroughs that's much greater than some of the rest of
Wait a
us.
second. You're selling a building in Brooklyn?
Yes, we are. And
Brooklyn.
I think the developer that's buying the building in Brooklyn will make a very handsome return on their money.
I think it's going to be right
conservative-
near the new stadium. It's going to be
conservative,
near the
sellout
Nets.
assessment.
You can have all these basketball players and over
Think of
there.
all the money you'll save on tickets.
As an investor, I like Brooklyn and Long Island City, and to live, I'd like to live in the Plaza.
One
If I
quick,
could afford it.
okay.
When it's
Time
ready.
is time is
Me
getting
too.
time is getting a little short, but I know that Prudential Douglas Elliman has a big business out in the Hamptons. Can those prices
Hamptons
continue?
is crazier than Manhattan right now. We have a $40-some-odd million listing on Georgia Pond in East Hampton that's going to go to contract.
There's a lot of money out
a
there.
lot of money.
There's
And
limited-
real estate
there's
is
a
a
limited
good
product.
asset class.
And you can have big Wall Street bonuses. A lot of Goldman Sachs partners around making a lot of money. One houses in the Hamptons.
It's a good year. So I'm really happy that today I've been able to have 6 leading real estate individuals give their perspective on 2005 real estate market. I'd like to thank my friend Jim Fitzgerald, Senior Vice President, head of the North American real estate for HSH Nordbank.
Happy to be here.
Scott Latham, Executive Director of the Capital Markets Group at Cushman & Wakefield, probably the best capital brokers and sales brokers around. Our friend from Connecticut, Michael Belfonte, President and CEO of Belfonte Associates, who's going to be
soon to be a New Yorker.
No, definitely signed a lease on 52nd Street.
Soon to own an Upper West Side building.
Soon to own an Upper West Side building, and I know he's going to do well.
Thanks for having me.
The man who's been in New York, who's bullish about New York for since 1971, at least when he went into business with his partner Neil. Norman Stern, a principal of Murray Hill Property. A gentleman who knows New York, probably. He came back, he's been in it, and now with the City Investment Fund, Tom Lydon, the president of the City Investment Fund, you're going to see their name. They made an announcement the other day, and there'll be plenty of projects. I really thank you. And last but not least, the biggest broker in New York, the chairman of Prudential Douglas Elliman, Howard Lauber. And Howard has some other things. He's also, for our audience, he also is Nathan's. You know, it goes back to the days when
I'm the official taste tester.
You're the official taste tester.
Do we get any free hot dogs or anything? Or?
I don't know. Maybe he'll do that. I really thank everyone. Next month, we're going to probably have somebody you mentioned over here, Josh Muss, and we're going to be talking to developers and seeing what they're going to be developing in the area. Thank you very much.
Funding for the Stoller Report is made possible by a grant from the First American Title Insurance Company of New York. The First American Corporation is the nation's leading diversified provider of business information products and services that impact the major events of people's lives.